Hello, I'm Hannah. Welcome to Scribe's 5-part series on year end. Today's video is on part 3, the AGAR section 2, the accounting statements. This is how it appears in the AGAR itself. And today I want to talk about the different ways of completing the boxes, depending on which accounting approach you're using, and also some pointers to consider when filling in each of the boxes. This is an example of the form that you need to fill in. As you can see, the current 21-22 form hasn't yet been released, but you basically need to complete the current financial year on the right with the prior year figures showing in the same format on the left-hand side. In the first part of this video series, when we looked at preparing for year end, I talked about the differences between receipts and payments and income and expenditure. Once you're clear on those differences and which approach you need to use, you need to consider what that actually means for completing section 2, the accounting statements. For those of you in receipts and payments, it's fairly straightforward. You'll be taking your figures directly from the cash book. So once the cash book is up to date, it's accurate and it's correct for the bank reconciliation, you'll be taking the total figures in order to complete the boxes for the accounting statements. For those of you working in income and expenditure, there's a little bit more work to do. Generally, you'll complete your year in receipts and payments month on month with the conversion to income and expenditure at the year end. That involves a little bit of additional work as identified here. Firstly, you need to exclude the VAT, as that will constitute either a debtor or a creditor at year end based on whether HMRC owe you a VAT reclaim or you need to pay them. And you'll also need to add in some adjustments such as creditors and debtors. That basically means that you're taking account of what's relevant to this year itself. When you work in receipts and payments, you just record what happens when it happens, regardless of when it relates to. So if you've made a payment in March, but actually it's paying for something in the next financial year, that's irrelevant. It's just based on when you paid it. In income and expenditure, though, you need to think about those items that have taken place and when they relate. If, for example, you've had goods and services provided in March, but you know you're not going to pay them until April because of the way your payment process works in the payment approval system, you would need to put adjustments in for them. They would constitute creditors. They're items that you owe that relate to the current financial year, but won't be paid to the new financial year, therefore you're going to adjust for them. Same for debtors, which is people that owe you. So if you've got customers where you've provided goods or services up to the end of March and those customers haven't paid you, you would need to put adjustments in for that, as you should have received the income in this year and they will constitute debtors. On the flip side, you may have instances where you've paid for things ahead. So if you paid for some building work, but it's been delayed till the spring, April, May time, you would need to take that value out of your accounts for this current financial year because it relates to the new financial year. And equally, if you've got instances where customers have paid you ahead for items you've not yet provided. For example, if you hire out your hall and they've paid already for a hiring in the summer, you would remove that income from this current financial year and show it in the new financial year because that relates to when they'll actually receive the service of the hiring of the hall. So thinking about what things do I need to adjust for to make the values right that are showing the accounts for this financial year relevant to what is actually happening. When you do that, there are a couple of things to consider. Firstly is the materiality and the regularity. So the materiality is the value of these adjustments. You may not want to bother about a few pounds here or there. If you've got a stationery invoice and it's a few quid, are you going to put it in, or are you going to set a level where you only put adjusting items through that are over, say, £50 or £100? Once you've set that level, be consistent and follow that principle through. Also consider the regularity. So if, for example, you pay your grounds maintenance contract monthly, every month you pay them £1,000 in arrears. If you're therefore going to receive March's invoice but not pay it to April, do you need to put in a creditor adjustment for that? Well, not really, because you're paying £1,000 a month anyway. So it doesn't matter if the actual related invoice and the months are out, but you've still got the total 12 months in your financial year. It would only be relevant if, for example, they went over and above the normal workload in March. So a tree blew down and they chainsawed it up and it's an additional £500 cost. You might want to put an adjustment for that because that's over and above what they normally charge you. Also make sure last year's adjustments are reversed. That will likely happen if you have software, but if you're doing it manually or you have an Excel spreadsheet, do make sure that you've reversed last year's adjustments and then you're replacing them with the current year's adjustments at the other end of the calculation itself. Now we can think about the individual boxes on the accounting statements and some things to consider with each of these filling in. So box 1, your balance is brought forward. Obviously, it's fairly obvious, but they must equal box 7. So box 1 is a continuation. So your closing balance of last year in box 7 becomes your brought forward figure in box 1. So make sure that's consistent, particularly if you've had reason to restate last year. Make sure that you're using the correct starting position in box 1. Box 2 is precept or rates or levies. So for councils, it's precept only. Don't be confused by the referral to rates or levies, because that's just for drainage board. So it's just the precept amount that you've received. And also be mindful if you've received anything else alongside the precept from your local authority, that it's just the precept. So if you council tax support grant, you split that out. So it's just the precept. Then box 3 is all other receipts. Make sure again that you're not including any bank transfers or movements of money between your accounts. That's internal movements of money. It doesn't want to be overstated as a receipt and a payment, so make sure that's not included. And be mindful, if you're working in an expenditure, exclude VAT. If you're VAT registered and you charged any VAT, as we talked about a moment ago, that's not included. Also remember that if you've received a credit note, an overpayment correction, a refund from a supplier, it is not a receipt, it's a negative payment entry. It's a correction of an overpayment, so it should not appear in box 3, total other receipts. Moving on to box 4, that's your staff costs. So last year there was new guidance related to what could be included, so it's just core staff costs. So hopefully you're all aware of that, but if not, refer to the JPAG practitioner's guide on what can be included. But basically it's salary, pension, NI tax. Make sure that's all going into box 4, but other things such as mileage, training, sort of associated staff costs do not appear in box 4. Box 5 is for your loan interest or capital repayments. Again, make sure you record that separately from your box 6 other payments. And then box 6 is everything else. So your total payment position, once you've removed the elements of staff costs and any loan interest that you've made, everything else payment wise goes into box 6. On the other side, flip side of what we talked about a moment ago, make sure you don't include any bank transfers or movements of money. Again, exclude VAT if working income expenditure. And also remember that overpayments, credit notes from suppliers are negative payments. And on the flip side, if you've got a customer that you've had to make a refund to, that's not a payment, it's a negative receipt. So just be mindful of making sure that you show things in the correct way and your box 3 and box 6 is not being overstated. Moving on then to box 7, which is your balance carried forward. It's making sure that this is the correct sum of boxes 1, your opening balance, plus your precept and other receipts, less your payments, which are staff costs, loan repayments, and all other payments. So making sure that that sums correctly. Box 8 is your total value of cash and short-term investments. So that's making sure that your bank reconciliation balances. So your bank rec must equal your box 8. Okay, and if you're working in the receipts and payments, your box 7 and box 8 figures will be the same. If you're working in income expenditure, they will be different by the value of your adjustments, including your VAT debtor or creditor as well. Box 9 covers fixed assets and long-term investments. So make sure that you've updated for any new assets or disposals that have happened in the year. Make sure you're consistent the way that you report the total. So if you use your original purchase value, which is the acquisition cost of the items, sometimes can be a little inaccurate, particularly if you've got very old assets or assets that you've inherited or been gifted, where you're showing the proxy £1 against them, but be consistent in your approach. Or if you've moved to current value, to be more accurate, but make sure that you are showing the correct approach for both the current year and the prior year, particularly if you've moved between them. Make sure you've got your supporting asset register with all the relevant information that relates to that figure that you're showing in box 9, and be mindful that you do not include any accounting adjustments such as depreciation. It's purely when you buy an asset, it goes on the asset register at the cost, and if you dispose of it, it's just removed because you've sold it. Moving on to box 10 then, this is your loan figure. So this needs to be updated to be the amount owed at the year end and likely to be your loans from the Public Works Loan Board. So just some things to consider when filling in all the boxes relevant to the accounting statements. Alongside them, you'll also have some additional information you need to provide to your auditor. So bank reconciliation, so that's as at the 31st of March, and as we said, must agree to box 8. If you're working in income and expenditure, you will need to do a reconciliation between boxes 7 and box 8, your bank position, and that will be a summary of your debtors and your creditors. So any adjusting items that we talked about at the start of this video, you will list on here and show how box 7 and box 8 are calculated based on these creditor, debtors, VAT figures, etc. And you may also need to provide an explanation of variances. You will need to look at the figures that you've completed for the current year in relation to the prior year, and where you have variances over 15% for boxes 2, 3, 4, 5, 6, 9, and 10. You will need to provide information as to why that is, or also if box 7, which is your total funds carried forward, is more than twice box 2, your precept. So that basically means that you're holding quite a lot of funds, and if it's more than double the precept, that's over and above what you would normally hold as your general reserve, and you'd need to explain why. So it's likely that you've got some large reserves, you may be working on a large project, saving up some money to build a community centre, refurbish the village hall, whatever it may be, and you will just need to provide some information as to why that is. Be mindful that you must give a full numerical explanation or breakdown of your reserves. It's not enough just to say, I've got more receipts this year because we hired out the hall a bit more because COVID's finished, etc., or nearly completed. It needs to be based on figures and values to break it down completely so they've got a full understanding of the information that you're providing. I hope that was helpful as a quick overview of things to consider when filling it in. Do join us next time when we're looking at part 4, the signing and publication of documents.